Hello and welcome to the turtlefollower.com, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the markets for the upcoming week of December 7th, 2015. Hope everyone had a great week. Market was quite volatile towards the end of the week, so let's jump right into the charts. Here we're looking at the S&P 500 futures, and what we've seen here is the market went sideways, fell out of that consolidation, all right, back into it. And now if we kind of clean this chart up a little bit, we looked like we were breaking out of a very tight consolidation, but now it almost looks like we're breaking out, or we're consolidating in a much larger range. All right, again, between that 2115 and 2015. All right, those are the two areas that we got to be careful of. You can see we had this big pullback on Thursday, a big rally on Friday, an inside day. So this is just nothing more than just consolidation, and no traders here are really showing any more dominance than the other. It's just an inside day from the previous day. But look at where we came to. We came right to the 50-day moving average, and we've done that twice now in the last month or so. We came right there, and then we came right there. You can't see that one, but right there. All right, so 50-day moving average, obviously a key level. If you're trading the futures and you're or trading the SPY, I would say you probably want to trail your stop right now up to that low from Thursday, or a little below it. And you can see trend line right in place as well. So as we've been talking about the last few weeks, I really think that 2113, 21 or 2013 area are the key levels. All right, and until we break one of those two sides, we're just in some market chop, as we have been for most of the year. Besides this big down move that we had, we've really just consolidated for most of the year, and the S&P, I think, is only up about 2% on the year, and that's really just a factor of where it opened, compared to where the market opened was in the lower end of the range. All right, so it's not like we've moved up that great. You could see here on the weekly chart, we opened the year up right around 2038.25, and we're trading 2088.25. All right, so we're only trading up about 55 points on the S&P over the entire course of the year. So not a lot going on. And that's kind of why it's more of a, find the strength, find the pockets of strength, and trade them as best you can. The NQ, similar situation. All right, let's clean this up here. All right, again, we thought we had this nice little consolidation, but now it's ultimately looking like maybe a little bit of a bigger consolidation in play. Still trading at the higher end of the range. Okay, so if you want to look at it from that point of view, still trading right below support, or I'm sorry, like right below resistance, all right, in this nice tight range. So this may be, setting up for a breakout. All right, you can see here we have the trend line in place. It didn't even come down to the 50-day moving average on this pullback, but maybe this is setting up a little bit better than the S&P and looking for a breakout over 47.31. Again, that lower level now is right there around 45.75. Okay, so 45.75, and let's take some of these other ones out of here that we don't really need anymore. Okay, so there's your two levels. 47.31 breakout. The first area of concern, if we broke below it, would be 45.75, and the bigger area of concern would be 44.50. All right, you can see those were the tops from the market pullback, and then a nice little bounce off of there early in, or the middle of November. And here we are again doing this video December 5th, and we're sitting right above that 45.75. So this one looks a little bit more promising than the S&P. Looks like it's getting ready to break out, and again, that breakout would be over 47. Let's just call it for ease 47.50. Dow up 339 points on Friday. All right, and again, similar situation coming in play. Here we thought we had a little consolidation, but now it looks like it's much more of a larger range. So again, this one kind of goes back to what we talked about with the S&P. This one looks like more of a larger area, what we've basically traded in for most of the year, and those levels would be right around 17,900, and the lows of that would be right around 17,200. Okay, so those are the two areas I would keep an eye on. And again, you can see this uptrend line is in place, so there's no doubt about it that we are trending higher, especially from the lows that we had in August. So no doubt about that. My concern here is that, you know, we're just still in that same range, and we've been in that range for most of the year. Besides that pullback, market really hasn't done much. So doesn't mean you can't make money. Just means that you have to be a little bit more selective in what you're trading. All right, but again, there is the picture of the Dow, and I'm looking for. I think what could happen is if the Nasdaq actually does break out, I think it could drag the others higher with it, and not necessarily that we get maybe a breakout on all three, which obviously from a bullish standpoint would be ideal, but I do think that if the Nasdaq starts to run, that we could see a little bit of a run into the end of the year. And the last one, the Russell. All right, let's remove everything. Let's just remove it all. Okay, so you can see on the weekly chart, we've talked about these consolidations. Now we have a lower one, but what I am looking at here is levels right through here. And you can see that level actually comes back even further. So the highs of this range, right around 1200, lows around 1130, right? But ultimately, trend line is pointing to the upside. Okay, and again, we had this pullback. Now you can see the Russell didn't recapture as much of the gains as the other indices did. All right, look at the Dow. All right, we're almost back to Thursday's high. Look at the Nasdaq, almost back to Thursday's high. S&P, all right. But look at the Russell. We basically came back midway on the bar. So not nearly as strong of a bounce in the Russell. Not surprising, consider the downward pressure that it's having. All right, you can see that we were under a downtrend. Now we are, coming into this big resistance area, this 1200 area, which is different than the other markets. The other markets are already back in that higher range, so there's not as much, not as many people looking to sell. All right. In this case, you have people that are holding and now looking at it, saying, "Well, I have all this overhead supply." Okay, all these people that bought in here essentially are now saying, "Well, if we get back to where I should have sold, I'm going to sell." All right, because they're probably looking back and saying, "Oh, I should have sold right around 1200 or so because that's where the support level was." Now we're getting back there and they're selling. So not as many people willing to buy right here, right now on the Russell because overhead resistance is so close as compared to the S&P, okay, where overhead resistance, yes, is super close, but there's not all that overhead supply that we talked about. All right, so that's the look at the four major futures groups. Let's take a quick look at the sectors. Sectors, you can see here, again, S&P 500 is highlight for the last 30 days, up 1.91%. But look at the XLV, XLK, and XLF, all right, all up over almost 4% on all of them. And looking at the XLV, what kind of stands out is, the outperformance it's had in the last, month or so, okay? You can see we are trading. Let's remove all these again. Let's make it easy. We are trading below the 200-day moving average. All right, so that's one thing that you just got to keep an eye on. But we are also setting up for a potential reversal. Look at the 50-day moving average. All right, it was trending downward. Now it's flat. All right, so now it's flat. It's providing support to the XLV. All right, supporting price. You have a trend line that's shooting higher. And you also have a resistance level right here that is overhead. So what's going to happen here is this is going to consolidate and build up steam, and it's either going to break to the upside or downside. All right, and if it breaks to the upside, then the next level of resistance would be all the way up here around 77. So it's got a nice little move. It's bouncing off the 50-day. I think we just got to keep an eye on this. It has outperformed. I know for members, I do have some healthcare names that we're going to look to add to the portfolio. And if you're not a member already, you could head on over to the membership sign up page on the website. Take a look at the free membership where we're going to start putting together the TTF University. That's not fully running yet, but you could also look at the premium membership where we go over all these trades, free 30-day trial for any paid membership on the site. So you could definitely come on in, check it out for 30 days, see if it's what you like, and see how we trade these day in and day out. So, again, we are adding a few new names to the portfolio this weekend, and that'll be in the separate video that we issue to members only. But again, if you want to become a member, it's a free trial, 30 days, and no questions asked if you decide to cancel at any time. Back to the charts. Again, XLV, I think, looking good for a potential breakout. XLK, you can see it's already starting to break out, and this would be breaking out to new highs. All right, you can see here, we've talked about this little consolidation, we've talked about the move higher, and now you're getting that little bit of a pop over the highs around 44.50. All right, so this is actually setting up very nicely because the fact is 50-day moving average is in play. All right, trend line is in play. We already took out Thursday's high. All right, so this is a nice reversal in the XLK, and the technology sector looks like it's going to continue to lead, which makes sense of why the NASDAQ is at almost new highs as well. Financials up 3.77% in the last 30 days. And again, just looking at this, nice consolidation, similar to what we're seeing in the XLV. All right, was downtrending. The 50-day moving average was downtrending, and now reversing, supporting price. And if we get a breakout over 25, then we'll go up to test 25.50, and then we'll see what happens from there. XLB, the materials play, these have been beaten up for a long time. Again, look at the 50-day moving average. Now we're trading back above it, and you can see here that consolidation now. That consolidation now has this larger range, but it also has this very tight range right below 46 that potentially could be saying, building up the energy that it needs to break out over 46, because it's not coming from all the way back here. So this may consolidate for another few days and then pop over 46. And if that's the case, then you could see it's got a little while to run. It would probably hit the 200-day moving average first, which is around 46.97, so about $1 higher. And until then, it could be a nice little reversal setup for you. XLY, all right, again, with all the shopping going on for the holiday season, not surprising to see this at the highs. This one's up 2.5% over the last 30 days. And, again, this is kind of what we look at. We want to try and weight ourselves to these 5 sectors now because they are outperforming the S&P. And that's one of the key areas, that I think a lot of people miss is you don't want to just take trades just to take them. You want to try and be methodical about where you're taking those trades and what sectors you're putting those trades in. So, again, we have a couple trades that we're firing off in the weekend update for the members. And if you guys have any other questions, let me know. Again, thank you for watching, and I hope you enjoy the rest of your weekend. Take care.